on the week. S&P up about 2.4, and the NASDAQ up about 3.2. But all these indexes still down on the year, whereas gold is still having a good year, despite having its worst March since 1980. Within that, it's still having a great year. But I think gold potentially could have the best April. Not 1980. Gold had its worst month since 2008. In March. But I think gold could have its best month since 1980. That's when gold had some huge gains. And of course, that was the year that gold peaked out at 850. But we had some huge monthly gains. But I think the stage has been set for a huge monthly gain this April, given the magnitude of the drop that should not have taken place in the month of March.
Gold prices gained 8.3% during the first 3 months of 2026, despite selling off substantially during March as the conflict in Iran prompted selling in search of liquidity. While gold is typically viewed as a safe haven during times of crisis, its gains during 2025, the best year for gold prices since 1979, meant that global investors sold off gold holdings as a ready source of funds when other assets fell in the light of the conflict breaking out. Well-known investor in global finance, PeterSchiff explains markets are moving opposite to oil, where rising oil pushes down stocks, bonds, gold, and Bitcoin. He explains that investors see higher oil as a sign of prolonged conflict and inflation, leading to tighter policy expectations that support the dollar and pressure gold. However, PeterSchiff argues that markets are missing the bigger picture, predicting that inflation will keep rising due to monetary policy and economic pressures, which will push real interest rates lower. As a result, this environment will ultimately be bullish for gold and bearish for the dollar, despite what short-term market reactions may suggest. Regarding the recent rally, PeterSchiff emphasizes that even after a nearly 15% surge, gold and silver mining stocks remain well below their February highs. He predicts that gold could rise back above $5,000 by the end of April, adding that while higher oil prices may pressure miners, the impact is limited, and the gains in gold and silver have not yet been fully priced in. If you're ready for unfiltered truth and sharp market analysis, hit that subscribe button. Let's explore the latest insights from PeterSchiff's recent interview.
If you look at the way the markets were reacting, they were moving in lockstep. Stocks, bonds, gold, Bitcoin. Every market has been trading the opposite of oil. You can pretty much look at the price of oil and know what everything else was doing. If oil was up, everything else was down. If oil was down, everything else was up. And the rationale behind this relationship is that oil prices going up are a reflection of the escalation of the war and the idea that the war will continue longer and have a bigger impact on the price of oil and therefore on the Fed and Fed policy, in that as long as oil prices are elevated and rising, the Fed is on hold. The Fed can't cut rates, even if it wants to cut rates, even if the economic data confirms that maybe it should cut rates the way it looks at the data. It won't, because of the fear of somehow higher oil prices spilling over into higher inflation and therefore keeping the Fed on hold because of the tension between the two mandates. But I don't believe that this relationship should hold with respect to gold. Also, you can throw the dollar in there too. The dollar goes up with oil, and so foreign currencies rise when oil goes down, and they go down when oil goes up. And again, this is the idea that a tighter Fed is going to be bullish for the dollar. But what traders are overlooking is the bigger picture. It doesn't matter what the Fed does with respect to rate cuts. If the Fed stays on hold, or even if it notches rates up slightly, 25 basis points, 50 basis points, that is not bearish for gold. That is not bullish for the dollar, because nominal rates are irrelevant. It's real rates that count. Inflation is surging by any measure, And it's not the higher oil prices that are going to cause the inflation. It's going to be the monetary policy that ultimately results from those higher oil prices, because that's going to help weaken the economy. And soon investors are going to start pricing in the next round of economic stimulus, which I believe will be enacted well before the midterm elections in November. There's going to be a lot of pressure for economic stimulus going into the economy. And the higher the oil price is and the longer it stays up, the more pressure there's going to be. But the war is increasing budget deficits, and all that's going to put downward pressure on treasuries. That's going to weaken the economy, higher interest rates, higher mortgage rates. And as the economy weakens and budget deficits widen and more money is printed, the inflation rate goes up. But immediately, these higher fuel prices are going to start feeding into the CPI, and especially to food. And food prices are also rising. I don't know if you've seen the price of coffee lately. That's surging. But all commodity prices are going to be impacted by what's happening with fertilizer prices. And so as inflation rises, that means real rates are falling. Real interest rates in 2026 are going to be far lower than anybody had forecast. Even if we had had 2 or 3 rate cuts by the Fed during the year, even without those cuts, based on a massive increase in even the way the government measures inflation, it's going to be obvious that real interest rates in 2026 are going to be much lower than anyone had forecast. And therefore, the price of gold should be considerably higher and the dollar lower. We got down to around 4,100 on Monday morning of that week before we reversed. And then we rose up, I think yesterday, we got as high as almost 4,800. So that's about a 17% rise. Gold ended up closing on the week at 46.76 because we did pull back yesterday in response to the president's disappointing speech, which I will get into next. But we still had a 5.8% rise in the price of gold on the week. So anybody who followed my advice last weekend and went to Schiff Gold and bought some gold and silver had a pretty good week. Silver up 7.2% on the week, closing the week back above 70 at $72.90. But an even better performance out of the gold and silver mining stocks. This is despite yesterday's drop and the fact that the week was only 3 trading days long, other than yesterday's drop. But so in the 4 days of the week, the GDX was up 14.5%, and the GDXJ up 14.8%. That's after yesterday's decline. So the first 3 days of the week saw huge gains, mostly in Tuesday and Wednesday. Most of the gain were those 2 days back to back. That dwarfed the gain in the stock market. The Dow was only up about 1.65% on the week, S&P up about 2.4%, and the NASDAQ up about 3.2%. But all these indexes still down on the year, whereas gold is still having a good year, despite having its worst March since 1980. Within that, it's still having a great year. But I think gold potentially could have the best April. Not 1980. Gold had its worst month since 2008. In March. But I think gold could have its best month since 1980. That's when gold had some huge gains. And of course, that was the year that gold peaked out at 850. But we had some huge monthly gains. But I think the stage has been set for a huge monthly gain this April, given the magnitude of the drop that should not have taken place in the month of March. By the way, Russell 2000 also had a pop on the week, about 2%. But again, all these gains are dwarfed by the gain in gold and silver. Now, yields on U.S. Treasuries did fall slightly on the week, but not much. The yield on a 10-year Treasury closed at about 4.31 something, and on a 30-year, 4.89. So, the highest the yields really got was about 4.4 on the 10-year and 4.99. I don't think I ever saw us touch 5%. So we're not far from the absolute highs on yields. Dollar index also had a positive week, but just barely. I think it eked out about a 25 basis point gain to end the week just north of 100. in gold and silver stocks last week, almost 15%. We're still way, way below the peak from the end of February when stocks were still cheap. Even though they had a huge gain, they were still cheap. Yes, gold prices have pulled back, but by the end of April, I think we can be substantially above 5,000 again. Yes, oil prices are higher, so that is on balance a negative for the miners, but not enough to offset the massive positive that never even got priced in from the big increase in gold and silver prices.
PeterSchiff criticizes Donald Trump for portraying military success as a personal achievement. He further argues that Trump is overstating the strength of the economy, claiming it was the best in history with no inflation, which he dismisses as misleading. He expresses that stock market gains are not unique and are largely driven by expectations of action from the Federal Reserve. Despite claims of a strong recovery after the war, the economy could face recession or stagflation, and these narratives may be used to influence upcoming elections. Schiff also mentions that expectations of falling oil prices are unrealistic, stating that oil is likely to remain elevated for years. Finally, he suggests that U.S. foreign policy decisions and shifting global dynamics could weaken the dollar's global position and accelerate de-dollarization, which will ultimately support higher prices for gold and silver. Let's jump into the interview.
When everybody is amazed at the brilliance of our forces, Trump really means the brilliance of Trump, that he is this brilliant commander-in-chief who has organized the greatest victory in the history of war, and how rapid, because he talked about how long World War I went and how long World War II went. And of course, during those wars, we were fighting, much bigger enemies than just Iran. But he compared the duration of those wars, also mentioned Iraq, mentioned Vietnam and how long that thing went on. But a lot of it is, because of him, because he is the president. And so a lot of it is he's just bragging about himself and his accomplishments. And he sees himself in our military, which of course he also claims credit for building up. But he also spoke again about the economy. And with the same lies that he continues to repeat, he said that he inherited a dead economy, the worst economy, the weakest economy in history, and that he built it back to the strongest economy in the history of the world. He said we have the hottest economy. This was before the war. We had the hottest economy by far. It wasn't even close. By far, we had the hottest economy with no inflation, zero inflation, and we had the highest stock market in history, and we had 18 trillion of foreign investment coming into our country, which again is a number that he just pulled out of thin air. But the fact that we had the highest stock market in history is irrelevant, because Biden had the highest stock market in history too. In fact, at this point in his presidency, even before the war, forget about the fact that most of the gains have been given up since the war, but even before the war, if you measure the gains in the stock market under Trump, they were lower than they were under Biden. So why are you bragging about the stock market when it's no big deal? Yes, the stock market, the Dow hit 50,000. When Trump took office, it was 44,000. It is no big deal. And the stock market is only really going up because the anticipation of the Fed cutting interest rates. That's why it's going up. But he's repeating all this nonsense about how great this economy was. And I think that's going to be how they're going to frame this for the midterm elections, because even though the economy, by any way you want to measure it, could likely be in recession, in stagflation, Trump is going to try to misdirect voters into believing that we had this great economy. Because what Trump said, too, is as soon as this war is over, and who knows if we're ever going to declare it over, but as soon as it's over, he said the economy is going to come roaring back, that it's going to be stronger than ever. That even though we had the greatest economy in the history of the world before the war, that when the war is over, the economy that we're going to have then is going to be greater than that. So we're going to have an even greater economy than the greatest economy in the world. It's going to be even hotter. It's going to be red hot just as soon as the war is over. So that gives him a great excuse. He also claims that oil prices are going to immediately come collapsing down. The minute we declare the war over, right, oil prices are going to collapse, which I don't believe. I think oil prices are going to be higher for longer. I think that even after the war ends, whenever the war ends, we're going to have oil prices that are permanently higher than what they would have been. Although maybe permanent's not, the right word, but years and years and years to come, oil prices are going to be higher than what they would have been had we not had the war. So I was talking about Donald Trump's disappointing speech that he gave on Thursday. Disappointing in the sense that he indicated that the war is going to continue for 2 or 3 more weeks and it's going to escalate. We're going to bomb Iran back to the Stone Age. The other thing that Trump said that was interesting, or maybe, I don't know if that's the right word for it, was that he claimed that when the war is over, when we decide it's over, we're just, going home. We're taking our troops and we're going home. And one of our missions is no longer to reopen the Gulf of Hormuz. That's not our problem, according to Trump. We don't need any of that oil. We have all our own oil. We're energy independent. And so we're not going to worry about that. All we want to do is eradicate the threat that Iran poses to the United States or to Israel or the rest of the world, make sure they have no more nuclear capabilities, and our job is done. The rest of you, you're on your own, right? You didn't help us with the fight, so you're just going to have to be on your own. Right? We made this mess in the Gulf, in the Strait of Hormuz. You clean it up. And if you want the oil, go in there and take it, right? That's what Trump is saying. We did the hard part. We destroyed their Navy and their Air Force. So, UK, France, Germany, any of you countries having problems getting oil, man up, send in some troops, go fight for it, take it, we're done, right? And I think this is not going to go over very well for the rest of the world, who is looking at a situation where the United States came in there with a military that they supported by financing our trade deficits and budget deficits and created a huge problem and then just left it to the world to try to solve it on their own. And by the way, if it was so easy to open up the Straits of Hormuz, why did we already do it? Because obviously that's what Trump wanted. I mean, he kept threatening all kinds of stuff on Iran if they didn't open it up. And now he's telling the rest of the world, it's such an easy job, go ahead and do it. Well, if it's so easy, why don't we do it ourselves? Obviously, it's much easier said than done, because it was as easy to do it as to say it. We would have already done it, right? But I think, again, this is going to be a negative for the U.S. standing in the world, more resentment of, the fact that the world has supported us, has enabled our trade and budget deficits, which has allowed us to have this big military. But now we're claiming it's for us, right? When we're finished pursuing our own interests, it's up to everybody else to do their own thing. And now he's, potentially talking about getting out of NATO, which, look, I'm not a fan of NATO. We should be out of NATO. We should be out of the UN. I don't like any of these global enterprises. They're just a cesspool of corruption. They make a lot of money for the bureaucrats from all over the world. I mean, what's the point of having NATO anyway? The sole purpose of NATO was to counter the Warsaw Pact, which was the Soviet Union and its surrounding allies. But the Soviet Union broke up years and decades ago. So the Warsaw Pact is gone. They're not maintaining that alliance. Why do we need NATO? So I'm totally fine getting out of NATO, but I'm just looking at the way this is going to be viewed on the world stage. And I think all of this stuff is going to undermine the US dollar even more as the reserve currency. I think it's going to accelerate the pre-existing trend to de-dollarize. And again, all of this is going to be good for gold, is going to be good for silver.
Goldman Sachs researches precious metals analysts think gold prices could go higher by the end of the year. They maintained their 2026 year-end price target of $5,400, saying they expect central banks to continue buying and for the Federal Reserve to cut benchmark interest rates by 0.5 percentage point. Gold has historically delivered strong returns during stagflationary periods, according to World Gold Council research going back to 1973, because it carries no counterparty risk and benefits from the same inflation expectations that hurt paper assets. Are markets underestimating the long-term impact of inflation and geopolitical shifts, and could gold be signaling a much bigger financial reset ahead? Let us know what you think in the comments. If this video brought you any knowledge, give it a like, subscribe, and ring that bell so you're always in the loop. See you in the next video.